products up, these whole life final and burial expense products, to where you only pay for them for a certain number of years, and then when you reach retirement, because typically in retirement your income goes down, you don't have a bill anymore. It's paid up. We call it paid up in full, and it just sits there, and then when it's needed, it comes out, and your loved ones are able to access the money you've set aside and pay for your final expenses. Of course, we have accidental death insurance. It's needed. It's crazy. I remember recently one of my friend's daughters was driving to high school, and unfortunately she was texting and driving, and she lost control of the vehicle, hit a tree, passed away. So we have accidental products. If you die by accident, you can get a payout. Now the great thing about the accidental death is it's a lot lower payment, because the only way it pays out, Scott, is if you die by an accident. It does not pay out if you have a cancer or heart attack, stroke.
Well, it's limited, but it does what it has to do.
Absolutely. The other thing that of course, we have the Medicare and Medicare Advantage products for people that are older or qualify for those programs, depending upon what types of conditions they have. So, those are awesome products. There's, I think, what is it? The baby boomer generation now, 10,000 a day are retiring at a clip. So if you need those products, we also have those.
I'm actually surprised Andy Albright would actually throw his hat in the arena when it comes to Medicare products, but we'll get into that if time permits. Okay, I know there was another one that you were talking about debt consolidation or something to that effect. I want to make sure you definitely get that in.
We are experts in what we call debt reduction programs. So, what are debt reduction programs? These are programs that you look at your finances. It's typically unsecured debt. We got three types of debt reduction programs. We've got debt assumption, debt settlement, and debt validation. So, just as when you sign up with a credit card, there are contractual agreement. And when you break your contract with them, then they're able to assess you what they call a late fee. It's totally legal, and there's nothing wrong with it. Now, I personally believe that there's a lot of rules and regulations out there that credit card company has to follow that most laymen like myself and most people in America don't know, that you're able to invoke on your agreements, and if they're not followed, then the credit card company is held liable, and it's able to legally reduce your debt, sometimes wipe it out to a zero balance. On the debt assumption, we can take most unsecured credit cards, medical debt, private business loans, signature loans, collection accounts, personal bank loans, gas cards, private student loans. So it's absolutely amazing. So we got debt assumption, debt settlement, and debt validation. They're all three. They're three different flavors of the same thing. So we sit down with our clients. What we do, Scott, here is we sit down with them and we really explain to them their rights. It's like, look, the credit card company has no problem invoking their right under the contract to charge you a late fee and to jack your interest rates up to 29.9%, or to double your interest rate from 11% to 22%. But hey, did you know that you also have these rights here that we can enforce upon the credit card company that's legal? I'll give you one example here. So if you have, I'm looking at this one, you've got at 24 years and 3 months to pay off this credit card, $28,000 in credit. You got the 24 years and 3 months, $28,365 in total interest paid. If it takes you 24 years and 3 months to pay off this, it's assuming you have $40,000 in total debt and a monthly payment of about $1,200. What we're able to do for a person like this is you got $40,000 in debt. We submit our programs. It's all legal. And we're able to say, okay, $20,000 in debt. We lower the interest rates. We do all this stuff. Then you got to make those payments on just $20,000 instead of the $40,000. So it's absolutely incredible. A lot of people don't know about these programs. So we got to, here again, what do? we save people financial future. We really want to help people and make people aware of all these other financial products out there. Same with the debt reduction. We also have a debt validation program I mentioned. And legally, these credit card companies, when they sell your debt and stuff like that, they have to follow certain rules. And Scott, I'm here to tell you, guess what happens?
What's that, Jason?
Most don't. And we all know what happened in this Great Recession. The banks were doing robo-signing. They were doing this. They were doing a lot of stuff that was flat out illegal.
Right.
Okay? It happens. Big companies do things they shouldn't do. We catch them, and we invoke the law. On behalf of who? Not big credit card companies.
Right.
On behalf of our clients. We are very, very vicious. We're like a dog on a bone, Scott, getting out there and bringing these people, these credit card companies to heel because they have no problem charging us what I like to say the Guido rate.
What's that?
The 29.9% credit card rate.
Right. I'll bury you at that.
You just, how are you going to get out from under that?
You don't.
So we love helping people get out there and do it. We also, those are our main products that we got. If you are a person, we also, Scott, here's the thing. We also have products for people that are higher income. We have some great products. We have got an insured retirement advantage. We like to call it an IRA. It's not an IRA, but it's an insured retirement advantage.
Okay.
And this particular product here is really designed for business owners. So if you're a business owner and you gross over $750,000 a year, then there's products that we can put together for you to help you with your retirement. So this is a little bit more involved, but we sit down with our clients with a money analyst and we get this thing put in place. And once again, it's money over time, Scott. It's like, okay, look, you're making some money. I got it. But we need to put something in place for your future because you don't want to be running this restaurant until you're 90 years old. I know you love doing it, but ultimately you want your kids to take over or you want your whoever to sell the business maybe. So let's put something in place while you're making money so you can enjoy your golden years, so to speak.
All right, and just so you know, folks, Jason is not a one and done here in the South Florida Tribune Broadcasting Network. Our plan is to bring Jason on a few times, so as we get more updates on products, then without a doubt, we'll make sure that we bring those on to you. Today's objective with Jason and myself is to give you an overview of an industry that doesn't get as much opportunity because of certain advertising restrictions. And this is only designed for informational purposes. I want to make sure that we set those parameters correctly. Information is what you're going to get out of this broadcast. So when you contact me through social media and so forth, then we can go ahead and make sure that you understand. So, I expect Jason to be able to go ahead and myself will help you out in giving you the phone number twice. We'll give it to you once before the broadcast is over. But Jason, tell everybody out there some of the companies that you go ahead and represent.
That's important. I'll tell you, I'm 50 years old, Scott. I'll be 51 November the 20th, right around the corner here.
Okay.
And I made it to half a century, so I'm proud about that.
Early happy birthday, Jason.
Thank you, sir. I lost my dad at 46 years old, Scott. We went and had lunch. He got food poisoning, and about 30 days later, he passed away.
Wow.
These products.
Tell me where he was eating. I'm not going there.
This was in North Carolina, so we
saved. I don't have to worry about that. Okay.
So here I am, 19 years old. He's got a total of 4 children, and all of a sudden, he's dead within 30 days. The food poisoning, for criminy sake. It's just unbelievable what happened. And Scott, I can look back now at 50, almost 51, and I can see the damage. He had no life insurance.
Right.
And I can see the damage it did to our family. We ultimately had to. He had 4 or 5 rental houses. We sold those. There's no, no money that's left over. The bank came in. Of course, they foreclosed because he couldn't make the payments on them. We lost his business he had. We eventually even lost the family home, leaving pretty much us kids homeless. I was 19. I was grown, so I was working and was able to get another job because at the time I was working for my father. Not only did I lose my dad, but I lost my job.
Wow.
So we got some very, very powerful products and very, very great companies that we work with. So extremely important to put these things in place. I want to touch on some of them. So I've been in...
Well, we got about 10, 11 minutes to do it.
All right. So I'm 50, going to be 51. Been in financial services the bulk of my career, Scott. And when you put your money with somebody, you want to know it's solid. You don't want to be putting your money with a company that's a fly-by-night or this, that, and the other. The great news about this industry is it's very highly, highly regulated. And here's one of the things you should know. Look at Bank of America. They've only got to set aside a certain percentage of their 5% or 10% of their deposits. So if everybody ran on that bank and tried to get their money out, Bank of America would not have the liquidity to give everybody all the deposits they have at the bank, because the bank takes your deposits and invests them other places. But at insurance companies, this is how strong they are. If you are a life insurance company, then all the people that you have insured, let's take Mutual of Omaha, they're worth $44 billion. If everybody they had a life insurance policy on was to die today, they'd still have $4 billion in the bank. Okay, so all the carriers are like that we deal with. Very, very super solid. So Mutual of Omaha, been in business over 103 years. Transamerica, absolutely massive. Another 100-year company, Columbian Financial Group. Fidelity and Guarantee. Baltimore Life, A&G. American Equity Investment Life Insurance Company. One of my favorite companies, and I'm going to touch on them a little bit here, is Foresters. Foresters Financial has been around for about 140 years. That's unbelievable. It started in Canada. They were actually a forester's company, people who cut trees down. And back then, a limb come down, they call them widow makers, and he would die. And what they started doing is every paycheck, everybody would put a nickel, a quarter into a bank account. And when that happened, they'd reach into that bank account and give a percentage of it to the widow and the kids. And that's how they started. They are a not-for-profit company. So they put a lot of their profits back into the company. Here's one of the things that Foresters does. We'll give a typical example. You got a mom, dad, 3 kids. Mom and dad go out to dinner. They're coming home. They get killed in a horrible car accident. They've got a $250,000 life insurance policy on both of them together, set up for the children. The children get that money. It goes to the person who's taking care of them. Set up for the kids. Maybe when the kids turn 18, they get that money. But who's gonna pay for the kids their monthly living expenses? With Foresters, they have an orphan benefits. It's free, Scott. It costs no additional monies. Nobody else does this out there for the price.
Right.
Other companies got it, but it costs money. Okay, you get $900 per kid per month until that child turns 18 years old. It's absolutely a great company to deal with. So National Life Group, been in business over 175 years. We have a company, Phoenix, that actually had a life insurance policy on President Lincoln in America. So we've companies that have been around a very, very. The point I'm trying to get across is they're super stable. Your money is safe, and we're here to protect your money and your future.
Now, I know, Jason, you're passionate about the products that you represent and the companies that you work with. But there's also an opportunity for agents as well. So why don't you go over the opportunity for about 5 minutes or so, and then I'll give you my number to reach Jason as well. So go ahead. You got about 5 minutes to inform people why the Alliance is a good place to work for. What are you going to do to help agents make money?
Well, Scott, here's the deal in this industry right now. Everybody knows the baby boomers are retiring, 10,000 a day, all this kind of stuff. The industry right now is in a period where we have the least number of active insurance agents across America and the highest demand for these products. So if you're thinking about getting into protecting people's financial future and you want to work with some awesome companies that has great training, great leadership, great products, great clients. We have clients requesting to come. They call us up and they need to see an agent in their county. We've got a ton of people that are requesting. We need some help out there. So it's a great time to join the industry. If you're looking to get in this industry part-time or full-time, Scott, Scott, here's the deal. I've got a single mom. Here she is, a single mom. And unfortunately, she lost her husband to cancer. And she's 33 years old, 3 little kids. And the kids go to school. And she wants to be there at home for her children when they get home from school. So it's like she's a stay